just go back. Taxon Chain, they're going to be talking tonight about tax minimization and strategic planning. Now, they have this POAP. Now, in a moment, I think that bar is going to go away, but it's basically a proof of attendance protocol. If you don't have a POAP, you should be able to just scan that. POAP is basically a proof of attendance protocol. They're going to tell you what the benefit of getting their POAP tonight in a moment. But basically, you can scan that. You can either attach your wallet. If you don't have a wallet, that's fine. You can sign up with just an email. And I think that there's going to be some sort of bonus or surprise. I wasn't given the memo, but scan that QR code if you would like. Next slide, please. It was working. Okay, there we go. Okay, gosh, technical difficulties. Just to give you a little bit of a rundown tonight, I'm going to do a quick welcome. Matt, my partner in crime, is going to be coming up and doing some upcoming events. Taxon Chain, and then some of their key partners, Pier, UpTrade, and SwiftX are going to be coming up and giving some presentations. And then we always finish the night with some more networking. So I promise there's going to be more networking and more drinks coming to you shortly. For those of you that don't know who I am, I know that a majority of you do. I'm not going to waffle on too much. I do a lot in this space. Ultimately, I'm a Web3 connector. I am the head blockchain trainer for TAFE Queensland. I recently started a role as a CXO for a consultancy based in the UAE. So I am expanding, and I am the founder of Women in Digital Economy, which is my passion project to help more women enter in the space. And then my volunteer projects are all things blockchain, off-chain Brisbane, and I also sit on the blockchain committee for the ACS. Somebody asked me today from DECA if I wanted to sit on the chair for the DECA Women's Board, and I was like, no, thank you. I think I already do enough. Yeah, I am a very busy lady. Love to connect with you. If any of those things I can support you in any type of way, please go ahead and connect with me. Now, all things blockchain, for those of you that are new to the community, I had this vision of creating a community organized and run by the community, and we founded it 4 years ago. We'll be having our 4th birthday in December, and it wouldn't happen without these amazing, oh, now the clicker is really working, volunteers, okay? So none of these people that are here that have been putting on, they all donate their time, so I'd like to always give them a big round of applause. I am the driver, I am the founder, but I wouldn't be here without these amazing people today, so I always like to acknowledge them. And more importantly, we wouldn't be here without the sponsors. So all the food and the drinks that you're drinking tonight, let's give Taxon Chain a round of applause because they are playing for it. Not only are they here to educate you, but they're here to give you free food and free drinks. So we appreciate all of our sponsors. So I'm not going to list through all of them. If you want to learn more about our sponsors and how they contribute to our community, you can just go to our website or our meetup. All the information is on there. But these meetups also would not happen without them. We do have some collaboration partners. So if there's any other community groups, we do like to work with them. So Off-Chain is a global community. I've actually had some great partnerships come from Off-Chain. So if you're traveling or you're going overseas, they're a great community to connect in with. Australian Crypto Convention, we have a discount code for you. Anybody already planning on going to the Australian Crypto Convention in November? Just a show of hands. All right, half of the room. So we do have a discount code of anyone that is planning on going. And then Women in Digital Economy, which is my passion project that I have launched this year. We are trying to grow more online. We've always been in real life, based here in Brisbane. We've done, I think, a pretty good job. We're growing globally and online. So we do appreciate, socials is, not our forte, but we are leaning on the community. So if you are on Twitter, we would really appreciate, or any of the other social platforms, for you to give us a follow. We also created the utility hub. So anybody that wants to access a different list of different types of projects, you can go ahead and scan that QR code. One of my students actually curated it for us. So for example, these are the lists of the different types of ticketing, supply chain, luxury, real estate. And so it's just basically a directory, and we have no endorsement in these projects. We try to vet them a little bit. And if you also also have any projects that you know that you would like us to add on there, you can go ahead and reach out to us and we can add it on there. So it's just a little bit of extra value that we are trying to add to the community. So that's it from me. I'm going to bring up Matt Hooper, who is our events manager, and he's going to take you through some upcoming events. So over to you, Matt.
Thank you very much. Thank you. Welcome, everyone, for tonight's travel segment. I think we have Electra maybe taking the prize. Electra's come from where? Somewhere in the US. We have a travel segment every time where I try to guess who's come the furthest in the audience. Nashville, Tennessee. All the way. That's a heck of a commute, I imagine. There is also George online. Hello, online George in Bali. Beyond that, can anybody beat Nashville? We've got Europe, maybe. Yeah, pretty hard to beat Nashville. All right, enough of that. Just a little bit of excitement, but we do thank every one of you for coming out on a not so chilly Wednesday night. Thankfully, maybe Europe online. My God. That is wonderful. Thank you for joining us. All right, coming up, we have so many events. Tonight is a QR clickathon, I've decided. We've got so many QR codes for you to click. Something that I've actually been thinking about for a while and didn't actually voice to Danielle, but Danielle's gone and done it anyway, because we put up a lot of stuff, but if you can't find where it is or you don't remember what we've talked about, it's hard to actually sign up. So tonight, we've actually got QR codes coming out of our proverbial. This is the next Ask Me Anything that's coming up on August the 12th with the excellent Danielle and the excellent Rachel. Big props to Rachel, who's really making strides in the scene. Then please come along to this one as well. This is my first AMA. It's going to be my debut. So it's not about me, though. It's about Virgo Cryptocurrency Exchange. It's going to be on the 2 weeks tonight, actually, about 8 p.m. We're trying a slightly later time of day to see how it suits people, putting kids to bed and maybe having dinner, and then tuning into an excellent conversation about how to stay safe on a cryptocurrency exchange and how Virgo do that. Virgo is one of our most recent sponsors, so we're glad to have them on board, and I'm looking forward to doing that with our good friend Viola, who many of you will know. Then we have an announcement. You would have seen this go out on Meetup today. Our next monthly event in this room, first Wednesday every month we're here, will be on Kraken and Security Summit. So we're going to be hearing from there another excellent woman in industry, Lisa Hornery, who's a good friend of ours from Sunny Coast. She'll be coming down. She works for Kraken in compliance, and she's going to come down and talk to us about how to stay safe using all that Kraken's got to offer. So I'm not seeing enough phones clicking the QR codes. I want to see. Yeah, very good, very good. It's going to be a cracking night, all right. Oh, I should have thought of that myself. Thank you so much. Our good friend Darren, and it looks like Mikey from DLTX are going to be talking at the end of the month, I think it is. A bit hard to see, August 26th, down at the excellent Cohort Innovation Space there. They are going to be having a Crypto 101. Good friend of ours, Darren. I've got lots of events for you, so I'm sort of whizzing through them. That's why we give you the QR codes. Hopefully they're all opening in new tabs in browsers on your phones. Our good friends at DECA, formerly Blockchain Australia. Soon we'll start saying that. Jack, when do we start saying formally? When do we stop saying formally Blockchain Australia? I haven't had a chance to catch up with Jack. Jack's one of their board members, and we're going to be hearing from Jack tonight. Okay, and I noticed a lot of the one of the upcoming URLs, the event page has all been redirected. It's all actually resolving to the actual DECA pages now, which is good. Sorry, that was a bit of an aside, everyone. Just to give the talk one more time, Blockchain Australia, primary advocacy body we have for DLT in Australia, has rebranded and is in the process thereof, which is what I've tried to highlight, to the Digital Economy Council of Australia. So we'll just call them DECA from now on. Our friends at DECA have the Blockchain Awards coming up, just as a pointer that's looming now. That's 2 nights before the AusCryptoCon. So they'll be on the Thursday night this year. So those making travel plans, you need to be down there for the Thursday, not the Friday. And that will be a usual, I assume, a black tie event at a location TBA and tickets TBA also. Jack? Yes. Yep, that's the short story. It's coming. I know it's coming. Also wanted to call out an excellent, actually, did I do the online one? Oh, that was that one when I was rambling about DECA. Sorry, that one. I failed to actually articulate what this is. This is an excellent all-day webinar, essentially, where Deca have assembled speakers from right around the globe, sort of a follow the sun approach to the timing of the sessions. So awesome speakers in the space in terms of regulatory and beyond. I've blocked out all my calendar that day. I'll just be sitting at my day job, secretly watching the webinar. But that's going to be really good. Deca.org.au/global. I checked that out. Someone like Adrian, I know there are others in the room who will be particularly either participating themselves or listening in. Also, very quick mention, because it's props to Queensland, that the conference is coming back to Queensland next year. It's going to be in June. It is a long way away, but I wanted to get that up. They've gone out with that. Talk to Jack. Give us a wave, Jack. Jack's from the board of Deca. He will be able to answer any questions you might have about potentially even sponsoring. Sponsor slots are open for that conference already. Just about enough out of me. There is that new URL of which I spoke. So Deca has the events calendar, which is most excellent, pulls in events from around the country. A couple of discounts with CryptoCon coming up. ATB10 will get you a little bit of a discount there for our friends at AusCryptoCon. The dates for that from memory are, I've got it up there because I keep forgetting, 23 and 24 November. I booked my accommodation and flights just the other day. Virgin had some good prices on. And I don't know if this is an early scoop, but the guys put this in the slide. Our good sponsors from tonight have an SMSF sign-up discount there for you. You get another QR code. See, I'm seeing lots of phones now, which is great. They'll talk more about that. And I'm sure we're going to hear a lot about SMSFs as we go through tonight. Enough out of me. It's over to Raphael Franco and Matt Merlahan, aka Merlo.eth, from our good friends at Taxon Chain. And a big round of applause for them putting on tonight for us. Thank you, Matt.
Oh, yeah. Thanks, Matt. Hi, everyone. My name's Raphael, and for those who don't know, I'm one of the co-founders at Taxon Chain. So Taxon Chain is a accounting firm that specializes in crypto, and we're based out of Brisbane and Melbourne. Today we've got myself here, obviously. We've got Oliver Woodbridge, who's the other co-founder of Taxon Chain. And we've also got Matt, who also goes by Merlo.eth. And we have Kate as well here today. So a couple of members aren't here. Nick Yaranakis, he's based in Melbourne. And Will, who you may have met before, he's just on holidays today. There we go. Yeah. So today's theme is obviously about tax and tax minimization strategies. But today we'll be talking about a tax, of course, but we also want to be showcasing how we give our clients an experience where we can unlock, some potential opportunities in the market with the help with some of our major partners. So we're lucky enough today to have some speakers from SwiftX. We've got Pav Hundal, we've got Jack Deeb from Pier 2, and we also have George Kaltekis, who'll be live streaming from UpTrade. So a bit about our services. Like any other traditional accounting firm, we offer the same services they would. I guess our difference is that we specialize in crypto and the blockchain industry. But the main services that we'll be touching on today is going to be about SMSFs, crypto SMSFs in particular, which are gaining a lot of popularity. And we'll also be talking about tax restructuring, tax planning, and some of those tax minimization strategies that are very, very common for most investors. Next. Nope. There we go. So common question we get from new clients is, the first question is like, how do I minimize my tax? Am I doing things in the right way? And today we'll just be touching on the most common ways to minimize your tax outcome. So this will apply to the majority of investors. And the main two common ones, they're super simple, super easy, and everyone should sort of be considering, is the 50% CGT discount for your investors and tax loss harvesting. So for those who don't know, the 50% CGT discount applies to gains that you've based on investments that you've held for longer than 12 months. So for example, you may have a scenario where you've bought Ethereum back in 2020 and it's now 2024 and you're thinking of selling that ETH for quite a large gain. since you've held it for longer than 12 months, you'll only be taxed on half that gain instead of the full amount. So it's definitely something that is worth considering or just being mindful of before you make a sale on your investment. So obviously, the larger the gain, the bigger impact this 50% CGT discount can make on any investments that you sell that you've held for longer than 12 months. The other very simple scenario, which is often like we don't see enough clients or new clients taking advantage of, is just tax loss harvesting. And what this means is basically selling assets that you purchased previously that you still hold on today, but have decreased in value since you've purchased them. So an exercise we like to recommend our clients to do, they can either do it themselves or we can do it for them, is before the end of the financial year, have a look at your portfolio, have a look at the gains and losses that you've made. And if you've realized quite a large capital gain for that financial year, then it might be worth looking at which assets you're still currently holding that aren't worth as much as you bought them for. So they might be like NFTs that you bought at the peak bull market, or worthless like meme tokens that aren't going to recover at all. You're better off, instead of holding them, selling them or disposing of them before the end of the financial year. You trigger that capital loss and you're able to offset that capital loss against your capital gains, therefore reducing your tax liability for that year. So a very, very easy way to lower your taxable income from investment activity. And unfortunately, for some reason, we don't see enough investors taking advantage of that. And I think one of the reasons for that is, a lot of investors just lose track of what they've been buying. They've bought like 1,000 meme coins and they don't know like where they are. They're in different wallet addresses. So just be mindful of, before the end of the financial year, sell your losses if you don't think they're going to recover. So those are the two basic ones. We have two other strategies which are also quite common, and they're not applicable to everyone. It depends on your own specific situation. But these are very, very common for a lot of our clients. And that's trading through a company or investing through a trust. So both these structures basically require you restructuring your investment portfolio. Instead of investing through your personal name, you can invest through one of these entity structures. And we'll normally advise these two structures or a combination of them if you're a high net worth individual or if you've got quite a substantial portfolio size. So for trusts, they go by the name of discretionary trusts. You may have heard family trust or investment trust, basically the same thing. And they're really good for, like I said, high income earners with a large portfolio and for those long-term hodlers. As opposed to investing through your individual name, if you invest through your individual name and you make, say, $1 million in that financial year, you're forced to pay tax in your own name, and you'll be forced to pay tax at the highest marginal tax rate, which is 47%. So obviously that's a scenario that you try to avoid if you can, and a trust can help you do that, particularly if you've got a spouse or other family members that you may be able to utilize. So instead of investing through your own name, you invest through this trust investment vehicle. That trust will carry on your investment activity. And at the end of the financial year, it will hopefully have, quite a large gain. And with that gain, the trust doesn't pay tax at all. But what it needs to do is distribute those profits or allocate those profits to members of the family group, which are often called beneficiaries of the trust. And the idea is to allocate those profits to individuals who are in a lower income tax bracket, and therefore therefore minimizing, the tax rate that's going to be paid on those profits. So with the trust, it offers maximum flexibility over how you allocate your profits to be taxed. And the idea is to, avoid that 47% tax rate. Companies are similar in a way that, we want to avoid getting taxed at 47%. Again, we recommend those for clients who are high income earners or have a large trading portfolio stack. And they're better suited for short-term sort of trading. or short-term investing. And the reason for that is, unlike the trust will get the 50% CGT discount, whereas a company won't get that. So if you're thinking of holding assets long-term, a trust is better suited. For short-term trading, a company is very popular. And with the company, the tax rate is capped at either 25 or 30%. So if you're in the business of trading and you're considered a business of trading, your tax rate will be 25%. If you're just a short-term investor, going in and out of trades sort of passively, you'll be taxed at 30%. So much better than being potentially taxed at 47%. So that's why we recommend these two options, or a combination of the two, to avoid paying tax at 47%. So here's a sort of a scenario where we saved a client around about $250,000, if not more, in one financial year. When they came to us at the end of 2023 financial year, they'd been a very profitable trader, trading meme coins non-stop, and they made $1 million, which was awesome. But unfortunately for them, every dollar above 180 grand was being taxed at 47%. So they had to give away a lot of their trading capital to the ATO. So their intention, or his intention, was to continue trading, to continue being profitable. So we advised for his trading activity to occur in a company instead. And with the company, given he was considered in the business of trading, we were able to cap his tax rate at 25%. At the end of the 2024 financial year, he was a very heavy trader, trading meme coins on Base, particularly during that month when Base launched and you had the Bald token and all those other meme tokens going crazy. That's where the majority of his profits were attributed to. He made about 1 to 1.5 million. We're still finalizing that, but based on those estimates, he will be saving at least 250 grand. So that's $250,000 or more that's in his pocket, rather than going to the ATO. And with that $250,000, he can obviously reinvest that into his trading activity and compound that growth. So that 250 could potentially, based on his history of trading, could turn into $1 million. So it really does make a big difference if you can retain as much profits as you can whilst they're in a company. So before we go on to Jack Deeb's presentation from Pier 2, we just want to showcase a scenario where we helped a client use the services of one of our partners, and by doing so has not triggered a taxable event, and being able to earn extra yield on his investment. So ETH staking is very, very popular. There's a lot of money locked in staking. And of course, a lot of our clients have some ETH that they want to earn some passive yield from. Now, this client had over 32 ETH that he wanted to sort of earn a yield from, which he had acquired back from 2019. And he obviously doesn't want to sell that ETH. He just wants to earn a yield from it. So one popular way that a lot of investors use to earn a yield is by staking it. And a popular staking method is by purchasing a liquid stake token. So you can swap your ETH for Lido staked ETH, for Rocket Pool ETH, and basically by swapping into these tokens, you can sort of earn a derivative yield just from holding that token. However, the unfortunate part is, by swapping into this token, the ATO will normally consider this to be a taxable event, and that might pose a problem for a lot of long-term investors who don't want to trigger that taxable event. Instead, they really just want to hold on to their assets and try earn a yield. By triggering a taxable event by swapping into one of these liquid stake tokens, it also resets the 12-month CGT, 12-month clock to access that CGT discount. So again, another reason why someone wouldn't want to maybe swap into a liquid stake token, because not only does it trigger a taxable event, but it also resets that 12-month clock for the CGT discount.
In terms of the regular space, I mean, do they get down to the level of actually saying staking, triggers this, and this, or we're wrapping around this sort of terminology that is confused? I mean, basically, you're going to be, I'm taking it from this, you're going to be careful about CGT, movement of crypto, right?
Yeah, exactly. The ATO have made it pretty clear through their guidelines that any token for token swap is probably going to trigger a CGT event. So even if it's ETH to wrapped ETH, unfortunately, if you ask the ATO if they consider that to be a CGT event, 9 times out of 10, they will say yes. There's obviously a very, very good argument to say why that shouldn't be a taxable event, given this, it's the same underlying asset that you're holding. It's just under a different ticker, and it might have, you know, slightly different attributes to it. But what you really need to think of when you are swapping a token for another token, if you were to ask the ATO whether that's a taxable event, they're going to say it's a taxable event. So that's the risk you run by swapping into one of these tokens and triggering a taxable event that you really don't want to trigger because, you know, in reality, we're all holding the same underlying token. We just want to earn a yield from it. So yes, you do have to be very careful and, you know, speak to your tax advisor if you're unsure whether, you know, swapping one token for another is going to trigger a taxable event and potentially, you know, create some tax liabilities for you. Not really. We had a recent scenario where someone had swapped or bridged a Radix token to from the Ethereum blockchain into the Radix blockchain when it went live. So it went from EXID to XID. There was a private ruling about it. The ATO said it's going to be a taxable event. We got the lawyers involved to see if we could object to that. And there was quite a reasonable argument that the lawyers put through, and still the ATO said taxable event. So just from going from XRD to EXRD, so similar to going from, like, say, Ethereum to wrapped Ethereum, bridging from one blockchain to the other. If you ask the ATO, they're going to say taxable event. So that's the risk you play. If you're happy to take that risk, it's worth speaking to a tax lawyer to give you that reasonably argued position. And that way, at least you're covered in that perspective, and you know, the ATO won't sort of enforce any penalties for negligence because you sought the advice from you know, a professional. But yeah, that's the risk we run by swapping from one token to the other.
They basically, you've got the stage of it and you're going to go.
Yeah, exactly. And look, until we get more clarity over this, it's best to stay on the safe side to avoid any sort of ATO penalties. We got to.
If it's involuntary.
Involuntary? What do you mean involuntary? Ah.
Involuntary. You've been talking about really options with someone makes an intent to something else. What happens if it's involuntary?
I'm actually not too sure. It's a very sort of unique situation. I know it happened.
Cash and Bitcoin, for
Bitcoin, cash,
instance.
Bitcoin. There are ATO.
Ethereum Classic.
Yeah, there are ATO rulings on that. I actually can't remember from the top of my head because that happened so long ago. And
All right, Rafa, we'll let you get back on deck unless Matt Merlo wants to.
But just clearly, isn't it once you sell it? So if you have an airdrop, you actually haven't sold it, so there's no taxable event.
yeah,
Oh, this is good. This is what we came for. This is what everyone came for. Matt Merlo, you're going to chime in here?
Matt
You're
wants
going to
to
chime
talk.
in here?
At a very high level, having the receipt of a coin like Bitcoin Cash, for example, that's what we would refer to as a chain split or a hard fork. It's something you've received out of doing absolutely nothing whatsoever. The consensus from the ATO is that it is not a CGT event. It has a zero cost base. There has been confusion, but the ATO has clarified in the event of Ethereum, because Ethereum Classic was considered the original chain and Ethereum was the fork chain, Ethereum Classic technically retains the cost base. Ethereum, not so much. So if you did have anything pre-fork, that Ethereum would have zero cost base and you'd basically be paying tax on the full amount that you sell it for. Chain splits are complete. If you hold it for more than 12 months, then yes, CGT discount is available where you are structured accordingly. But airdrops are, again, another different beast.
All right. We said we weren't going to take questions. So the reason I've done this, I've just done this to mix up the vibe a little bit, Raph. I didn't want to hijack at all, but it is that these guys will be available to you after the prezzo. So do go up to them. We'll be here. Well, at least Danielle will be till 8:15. So otherwise you might need to take it offline with them. But Rapha, no more questions. Back to your prezzo.
All right. So with the staking, yeah. So swapping token for token, think about that as a taxable event, but you want to earn yield, but you don't want to swap your tokens. So what's the solution there, particularly if you've got at least 32 ETH? So if you at least got 32 ETH, then the option is to natively stake that on the beacon chain. And what that transaction looks like from a tax perspective is a one-way deposit into the Ethereum beacon chain contract, the staking contract. So there is no token for token swap. It's a one-way deposit. And it's the least likely sort of transaction to trigger a taxable event. I don't want to say it definitely won't trigger a taxable event because the ATO still haven't made it clear whether a one-way deposit is non-taxable. Yeah, logically, thinking it's not going to be a taxable event. But the issue with this, so we've advised this to our client, that they've got the 32 ETH, they want to, deposit it into the beacon chain. The issue is you have to maintain a validator. So you've got to run a machine at home. You've got to make sure, it's always powered, that you always update the software, you always update the hardware. It is a big responsibility, especially when you've got 32 ETH at stake, that you could be penalized for if you don't do the right things. And so with that in mind, Pier 2 sort of, fills that hole. So what Pier 2 does, and what they did for our client was allow our client to deposit and stake their ETH into the beacon chain, start earning a yield like any home solo validator would. But instead of the validating, requirements being done by the client, they were able to outsource those validating requirements to Pier 2, who take care of ensuring that, the infrastructure is there, the software is updated, and the machines are always turned on and validating the blocks and doing its job. So from a client perspective, it is literally passive yield without them having to do too much other than send their 32 ETH or more into this contract. So Jack Deeb will be talking more about Pier 2 and sort of the services that they offer to our clients, but also institutional clients, and some major players in the Ethereum space.
Thank you very much, Rafa. It was absolutely awesome. How awesome is it to have, in crypto and in internet world generally, we can work from anywhere, but how awesome is it to have this level of expertise right here in Southeast Queensland? I just think it's wonderful that we've got these sort of people. You can go to Eagle Street, you can have a meeting and catch up and find out about these nuanced discussions. And we're also hearing there about staying safe in terms of what the ATO might think about what you're doing. Basically the rule of thumb in my book is if you're doing anything, it could potentially be taxable. So take great care out there. We've got Electra Frost in the room. We've got Marina from Silotax also. We've got plenty of taxation experts based right around here. But right now we're going to hear from Jack Deeb, also another Brisbane-based business, Pier 2, formerly Mycelium, and he's going to talk to us about some strategies that he has as a partner of Taxon Chain. Jack Deeb.
Cheers, thank you. Thanks everyone for having me. Glad I'm not talking about tax. Let's put it that way. But what I will be doing is firstly giving a bit of an explanation about what Pier 2 is generally, and then at the end of the presentation, I'll be getting into what is non-custodial ETH staking and how does native ETH staking actually look and feel, which was what Raph mentioned that we'd worked on together with a mutual customer, which I'm excited to get to. But yeah, maybe taking a step back for a bit of background. My name is Jack Deeb. I'm one of the co-founders of Pier 2. We were established in 2018, based here in Brisbane, and try to stay pretty active in the blockchain space, but particularly in areas including staking and infrastructure, which I'll get to explaining. And then also on the DECA side, which was mentioned earlier as well, I sit on the board of DECA, formerly Blockchain Australia. So yeah, please come along and attend all of those events that were mentioned earlier as well. And if anyone has any questions about either of those hats, come and find me after you've suffered through this. So who is Pier 2? We are one of the top staking operators in APAC now, with over 3 billion in assets under stake and delegation across everything that we do. As I mentioned, we were established in 2018. So just to be clear, our customers are enterprise customers, so wholesale. Our business is B2B, but we've been really expanding our staking offering in the market since 2023. There's also a piece that I'll mention at the end, which is we are funded by the Ethereum Foundation to be building a light client right now, which is something we're really excited about. And so I'll get to that again closer to the end of the presentation. So staking. So the first vertical of our business is staking. We work on Ethereum, which is what I'll be describing at the end, but we also work with some of the other leading proof of stake chains like Solana, Near, Polygon, and there's many others. Our customers are exchanges, custodians, funds, and high net worths as well that meet that wholesale test, which is where we work with Taxon Chain on some mutual customers in Australia and in APAC. One of the reasons why I think we've been really successful in growing our business in staking in the ecosystem is we have really high performance. So this is of course all on chain and available, but you can see this is the composite ether staking rate, which is CoinDesk's product that measures the staking rates that are achieved by all of the staking operators globally. And yeah, we're proud to be very performant using that industry standard scale. The way we achieve that, we've been tweaking and optimizing Ethereum infrastructure since 2018. We've got a globally distributed team that are watching this stuff 24/7, 365 days a year. So it's a bit of fun doing it. I'll tell you that. The other thing that we do is that we work with some of the leading protocols in the space, running infrastructure for them directly. So in 2019, we began supporting Chainlink, which is, I guess, the leading data product in the ecosystem, running their first Bitcoin and ETH price feeds on Ethereum, which again is this sort of 24/7, 365 task. But since then, we've partnered directly with a few other leading global protocols looking at things like liquid staking, like Lido, which was mentioned earlier, restaking, like EigenLayer, liquid restaking, which is EtherFi, Bitcoin staking, which is incoming, and Babylon, DVT, which is a technical distributed validator technology, and then L2. So we do a whole bunch of stuff that I won't bore you with, but may be interesting to some people in the audience. All right, and as I mentioned earlier, this is Lantern, which is our light client that we're building that's funded by the Ethereum Foundation. So what this will enable once built is for anyone to interact with the Ethereum blockchain from a mobile or IoT device. So the problem that we're addressing is right now, many of you, when you're using a wallet, you'll be interacting with Ethereum via an RPC provider. So effectively, you aren't interacting with Ethereum directly when you're interacting with Ethereum. And so we're building a client which will be able to, in fact, interact with Ethereum directly from your mobile phone. So it foreseeably lowers cost, improves access, and yeah, it's something that we're really excited about. So more on that, but maybe not in this presentation. So to non-custodial ETH staking, this was as neat as I could get it. So I'll try to make sure that everyone understands what we're talking about. But basically, I think it's important to flag that like staking is maybe a dirty word, or at least a word that's used to describe many different things. But I guess the point is the Ethereum protocol is a direct and identifiable and open source thing, and they describe the proof of stake mechanism and the staking mechanism as staking. So I think it is correct to call what I'm about to describe as staking. So how staking works is, as Raph mentioned, you need 32 ETH, a minimum of 32 ETH to stake Ethereum. You need 32 ETH to create a validator. So assuming that you have 32 ETH, you can send a deposit transaction directly to Ethereum's beacon chain, which will then commence a process of spinning up your own validator. And so for someone like Pier 2, we don't have to touch your ETH. We don't offer a custodial solution, so we don't sit in the middle of that transaction. But in that transaction, you would nominate Pier 2 as your validator manager effectively. So at the point in time that the validator becomes live, we would then start performing the technical duties on behalf of that validator. So every 12 seconds, we're participating in Ethereum's consensus mechanism. And then when you get lucky and can propose a block, we participate in Ethereum's execution mechanism. So we go ahead and do those duties for our clients. And then at the end of the day, once you've decided that you no longer want to be staking, you then unstake the 32 ETH that you originally staked. It goes back to whatever custody that you staked it from in the first place or wherever else you'd like it to return to. And that's sort of the whole flow. Rewards are earned every 12 seconds, but are paid every sort of 5 to 6 days. And of course, it's what we know and love about blockchain technology. You can see everything that your validator does at any point in time, every block that you propose, how performant we're being, which is why we need to be really performant. But it is a very sort of high touch open source way to perform these duties. So yeah, as Raph sort of mentioned, like the exact use case that we're talking about here is instead of going to Lido to deposit your ETH and receive back STETH, instead of doing that, you can actually spin up your own validator, earn those returns via your own validator, and yeah, face someone like Pier 2 directly to consume that service. So that's what I wanted to say. I'll now pause and happy to take any questions.
A quick 1 or 2 questions, maybe. We are running a little bit behind, but there's a couple of half hands. I always like to hear from the ladies in the audience.
I was just going to ask, what is your minimum staking time for ETH?
So do you mean how long you need to be staked for? Yeah, so both the deposit queue and withdrawal queue are variable. So there is no minimum time that you need to be staked for Ethereum in particular. But let's say you deposit today, and it's a variable queue, so I can't tell you it's going to be 2 days, but let's say it's sort of 2 to 3 days to get the validator spun up. At the point in time that the validator becomes live, you can then unstake or withdraw the 32 ETH, and then there'll be a withdrawal period as well, which is again variable. So it might be 2 days, validator becomes live, decide you want to unstake, request to unstake, and then another 5 days before you get your ETH back. All of the queues you can Google it and see what the queues are at any point in time so that you do have visibility before you stake what the staking, unstaking time looks like.
Do you support Polkadot and what's your fee?
So we don't.
We'll take
don't
that as a
support,
comment. Take that as a comment.
Yeah, we don't support Polkadot right now, but there's a lot of networks that we're looking at. Polkadot's one of them. We actually partner with a company who's particularly strong on the Polkadot side. So yeah, I mean, happy to hear any thoughts that you have on Polkadot. But certainly in a market like this, there's so many different chains that we're really excited to support. So if I said to my CTO tomorrow, support Polkadot, he'd probably kill me, to be honest. Yeah, that's right. That's right. So yeah, I'm not going to get up here and sort of tell you all the reasons to buy Polygon, but so 10% of Ethereum staking total rewards. Yeah.
Just a quick question. In terms of the different chains, and quote me, the last time I checked, I think with the Polkadot, it was like a minimum 14 days. You're saying with Ethereum, you can, stake and then kind of unstake. In your experience, what's the average time that people feel comfortable with being able to lock up their funds? Because I remember when I did a crowd loan on Polkadot, I locked it up for 2 years, and then I had to come back 2 years later and, I was just testing with it. But in your experience, what are people comfortable with?
Yeah, so it's a really interesting question because Ethereum staking became possible in December 2020, but they didn't release the functionality to actually unstake your Ethereum until March last year. And so the industry norm is to stay staked. But I think that's like looking at data from March last year through to now in terms of like who unstakes and why they unstake. I think certainly it's the kind of thing that, assuming that you stake and you trust the provider that you're staking with or the protocol that you're staking with, foreseeably it's something that you sort of set and forget if you want to like maintain that sort of ETH bag that you've decided to buy in the first place. But then, you know, there's all sorts of reasons why you may decide to unstake. So something like a staked ETH ETF, like 3IQ staked ETH ETF in Canada, they're obviously managing like an ETF, right, which is going to have buyers and sells. And so they actually stake about 50% of that, the value of that ETF, the ETH being held in that ETF, and are constantly watching to see whether they're going to sort of stake and unstake based on the redemptions for that product. Yeah. No. So there's four technical reasons why you can get slashed, and like unstaking is not one of those. Yeah. Adrian. Oh, dude. What is the capitalization period for your staking from a taxation perspective? Yeah.
Invest cash on something, and there's a capitalization on the interest component, I will pay tax on that capitalization. With your period of staking, what's the capitalization period, and how do you account for the taxation that might be attributable to that?
Yeah, so I think from my perspective, we don't take cash. So someone will come in with Ethereum, for example. Yeah, so even if it was Bitcoin, we also don't provide tax advice. But I think what we see a lot of people doing is they've already bought their Bitcoin or Ethereum. And we're talking about Ethereum, we're talking about staking. So they'll stake, then they'll start to earn rewards every 5 to 6 days, as I mentioned. And so all of those sort of rewards and reports will all be sort of active and passed on to the customer. The customer will then see the amount of income that they earn from staking, and foreseeably pay tax on that amount of income as directed by their tax advisor. No.
Awesome. Thanks, Jack, for talking all things ETH staking.
Thanks for having me. Thanks, guys.
So we're on to our next partner that Taxon Chain deals with quite regularly, and it's George from UpTrade. So a quick introductory to UpTrade. They're a brokerage firm, and I guess where our clients and where we've dealt with George in particular is when our clients are facing a lot of on-ramping issues into exchanges. So if you've tried on-ramping onto crypto exchange, you may have had some difficulty, particularly in the last couple of years, especially if you got an account with CBA. CBA bank restrictions are you've got to wait one full day for your deposit to arrive into any one Australian exchange. And there's a $10,000 deposit limit for the month. So if you're a large investor and you want to put 100 grand and you've got a CBA account, it's going to be very, very difficult to put that in one go. There's probably going to be a few phone calls to your bank manager. And even then, it may still be impossible to deposit that 100 grand in one go. So we have a lot of clients, a lot of SMSF clients who regularly ask us, what's the most tax-friendly bank and stuff like that. We actually kind of provide advice on which bank is the most friendly, but there's obviously ones that are a bit easier than others to sort of use as an on-ramp into crypto. But as we saw on Monday, massive market sort of collapse very, very quickly, very, very sharp. And, a lot of people want to buy that dip really quickly, and they might have, quite a lot of, fiat ready to deploy into the market. So that's where a broker can come quite handy. They, unlike an exchange, they're not an exchange, so a bit easier to sort of, bypass those sort of on-ramping restrictions that a lot of banks have. And so UpTrade have helped a few of our clients in the past on-ramp into crypto within minutes with a lot of money. We're talking hundreds of thousands of dollars that they want to deposit straight into the market in the space of 5 minutes without having to use a bank, without having to trust a bank to let their deposit go into a SwiftX or a BTC markets, whatever the Australian exchange is. UpTrade does offer an alternative for large players to get in as well as out of the market. But I won't speak too much because George has got plenty to tell us about UpTrade and the services that they provide to wholesale clients, business clients from Australia and overseas.
Yes, thank you. Thank you, Raph. It's nice to see you all. And yeah, it's a really exciting event tonight. I wish I could be there in person, but I'm just currently traveling at the moment.
It's good, George. If you could make yourself just a tiny bit louder at your end, that would be brilliant. But it's coming through nicely. It looks like a nice evening in Bali.
It is. It's a bit too much sun at this point. For some reason, this luxury villa hasn't got any blinds in the main lounge, so that the sun is beaming at me. But yeah, Bali's beautiful. And looking forward to getting back next week. So yeah, thanks Raph for this exciting opportunity to speak at this event. And yeah, for those who don't know, I'm one of the senior brokers at UpTrade. We're a registered digital asset brokerage based in Melbourne. And so today I'd like to discuss a little bit about how UpTrade complements the traditional methods of using exchanges, which I'm sure some of you are familiar with. And they're great. They're a great platform to execute trades in a self-serve way. At UpTrade, we offer a different but complementary service. It's particularly suited for those who are looking to diversify their traditional portfolios and add exposure to crypto. Think about people who are business owners who they want to invest, but they may not have the time or expertise to manage that independently. And we provide a valuable alternative for those who prefer a more guided approach. So we focus on building personalized relationships with each of our clients, and just each client is provided an experienced crypto broker who assists in navigating their investment journey and to help achieve their financial goals. And so really it's about offering a guided resource to help clients steer through the often volatile crypto market. I know that on Monday was a pretty large scale event that I'm sure everyone is sort of aware of to some degree. And, it's such a fast moving environment, having access to the right information and as Raph said, the ability to get money into and out of the market really quickly, because these opportunities they do sort of fade quite quickly. And that can be the difference between, quite a large percentage difference in your ROI. So, yeah, I guess our role is to, help empower our clients to make the right choices, help them avoid common pitfalls and maintain objectivity in the trading process. We want to just complement the independence and flexibility provided by exchanges by offering a bit of an added layer of personalized support and expertise. So just to the next slide. Just the one before on DIY. It should be a photo of somebody. Yes. So this is a funny photo, but I thought it's really relevant to just sort of explain, people are thinking, what is a brokerage? It's like think of a traditional stockbroker, but in the crypto world. And, this photo is something I think we can all relate to. It's, a home renovation, do-it-yourself project that didn't go as planned. At first you sort of start off, it's all fun and exciting and a challenge, whether you're trying to install new plaster sheets, a new kitchen, or for those that are more bold, trying to renovate the entire house. It seems like a cheaper option at first compared to hiring professionals, but as the project progresses, the reality of inexperience can set in. Issues may arise weeks later. It might take more time than expected, and costs can skyrocket due to mistakes. So what seems like a budget-friendly endeavor can quickly become very expensive. So this scenario mirrors the difference between using a brokerage and an exchange. While some self-executing exchanges are great for those with all the necessary information and expertise, not everyone has that level of knowledge, especially in a new and emerging asset class like crypto. And there are bound to be blind spots and missed opportunities, and with the biggest being the opportunity costs of time as time passes in a cycle. And so what we've found is that, with each passing cycle, it's getting more and more complex and challenging, but equally rewarding. And so using a brokerage can really help provide the guidance and expertise to navigate these complexities, just much like hiring a professional for a reno project where, we carry the risk accountability so that you don't have to. And it just ensures that you can save time, avoid the mistakes, and make the most of your investment opportunities. So, yep, on to the next one. So yeah, at UpTrade, our professional services, encompass the buying, selling, and swapping of over 500 currencies in crypto across 11 exchanges. That also includes DEXs or decentralized exchanges, and we have support from up to 7 liquidity providers. We also support major fiat currencies such as the Australian dollar or US dollar. Being a 24-hour brokerage service, we provide trading options for over 500 assets, and you can register as an individual, a company, a trust, and will be assigned to a personalized crypto broker. In addition to trading, we also offer custodial services. and provide timely market updates and research. So our analysts and our team all have a minimum of 6 years of experience in crypto investing, and that brings sort of really extensive knowledge to ensure that you're getting the right insights tailored to the unique dynamics of each market or cycle. And this operates extremely different from traditional investing. And I guess this expertise, it's really crucial in navigating this one in particular, which has really been shaking out a lot of people and sending emotions to the maximum extreme, fear and greed, more so fear than on Monday. And so I hope everybody kept cool around that period. So the next slide is the one that Raph is mentioning in regards to fiat on-ramps and off-ramps, which I think many of us are familiar with. Some of the banking, I guess you could call it, limitations or challenges that are happening at the moment as banks continue to refine their policies on how they're going to treat crypto. And this can be really difficult for people or investors that want to invest large sums in the market. As Raph mentioned, this is one example, but we had a client who wanted to put X amount of money into the market. I think it's about 300 grand. And one of the top 4 banks only allowed, say, 10 grand a month. And that would have taken quite a long time to get that in. And at that point, it was near the all-time high. So a lot of FOMO was kicking in. And, in some cases, these transactions lead to bank accounts being shut or transactions closely scrutinized. And especially for, corporations that work in crypto, that's really a big problem when your bank's being shut down. So, at UpTrade, we knew these challenges in advance. We understand how to structure things, and we really address them head on. And it's a pretty seamless on-ramp and off-ramp experience, and it allows transactions ranging from 10 grand to 10 million per day per client. And we have the liquidity to support that at really rapid speeds in the same day settlement. So we also provide support in 5 major currencies and, successfully manage thousands of transactions for clients across North America, Australia, Europe, and Asia. So the next slide is something that each client receives, and it's about helping them to understand their journey. So when we start working with a new client, especially those that are new to crypto, we provide a bit of a comprehensive breakdown or investment strategy to help define their investment goals, their risk tolerance, and their preferred market narratives. We also outline their capital strategy, whether they want a dollar cost average into the market based off timing-based entry points or price-based. And then we present some options that align with their objectives. And so the idea of this is to eliminate any emotional decision-making in crypto investing, which can often swing, again, as I said earlier, between fear and maximum greed. And so by offering a structured strategy, we help clients stay focused on their long-term goals. So, the example that Raph gave on Monday, a perfect example, the amount of clients that we had call who were concerned about selling their positions. And, we don't blame them. It was the biggest liquidation event since the FTX collapse. And, we approach this from a technical perspective, helping them understand it as a potential market flush and avoid any emotional driven decisions. So we provided, research and timely updates and guidance, which helped clients either buy the dip at its lowest point and or reallocate to more secure assets if people are more, risk averse and they're quite concerned about, where things are heading. And I think to the next slide. So we have a team of in-house analysts, and they produce top-tier research by curating information from some of the top-tier sources that are out there. It really helps us stay ahead of the curve with latest trends and narratives in the crypto space. And we really do focus on the underlying fundamentals of blockchain technology. And we also keep an eye on emerging assets and those that are really performing well. And our research doesn't really go, it goes beyond, current trends and fundamentals. We also analyze, economic and geopolitical events, any unexpected developments, recent market updates that could influence the crypto world. And we just sort of have a holistic view of the broader context and a really fine view. So for an example, this cycle has been quite rewarding, but also equally challenging, and certain themes and narratives are leading most. Realizing cultural, historical, and political trends has been really vital for finding these top performing assets. And a lot of the venture capital funded projects have faced challenges due to a large amount of sell pressure from early seed round investments. Sometimes in comparison, fair launch projects have thrived with, I guess you could call it fairer tokenomic launches. So this research is currently available online, and it's done by a fantastic team of analysts, that have quite a lot of experience in the space, but it will be soon shifting to a subscription-based model, but it's free for now. So this is I guess the last slide. So I guess being a brokerage, we don't have any sort of bias, and that's the good thing. We facilitate over 500 currencies across multiple exchanges. It's not limited to any single platform. We're very impartial, and we help find the best pricing and opportunities rather than favoring any specific exchanges or tokens. And in addition to traditional exchanges, we also facilitate access to decentralized exchanges like an emerging network like the Base network or Jupiter. And this is sometimes where the value opportunities may arise. And so our goal is really just to offer a broad range of options and competitive prices, just to ensure that people have access to the wide range of opportunities in the crypto market. So I guess that was a bit of a summary. And to the last slide. So yeah, if some of you in the room were looking to engage a professional service just to level up your crypto experience, we've got our eyes on the market all the time. Sometimes it's not just new entrants; it's experienced investors that just want to have a bit of a sense check and soundproof their strategies and ideas, and just have a discussion about the information. It's a good fit for some people. It's not for everyone, that's for sure. We've got a 24-hour trading service across multiple brokers, analysts, and traders. And so today, we'd like to extend an offer of a 30% discount on the lifetime of our trading fees for everyone in the audience. And we can offer a free portfolio health assessment if you're already owning crypto and want a health check, or any one-on-one consultation with a crypto broker. So we'd like to extend this for the next 3 days. So if you want to get in touch, please feel free to take advantage of that. And thank you for your time today. Also happy to answer any questions.
Thanks for that, George. Did anyone in the crowd have any questions? I did have one question for George while I've got you. Do you see many people, or do you offer custody services for your clients?
Yeah, it's a great question. Being in the space for so long, I obviously endorse self-custody, if it's safe to do so. And safety and security is the forefront of all our conversations, is risk management, making sure that people aren't going to lose their assets. But we offer custody through Fireblocks, one of the gold standards in crypto. They even come with $20 of insurance coverage per client, and that's for funds at rest and in transit. They have one of the strictest security measures, and they're ISO compliant. They're always doing penetration testing from a cybersecurity standpoint. So I think if you're familiar with Fireblocks, we offer that all inclusive.
That's perfect. And one more question as we lead into SMSFs in the next couple of slides. Do you see many people taking up self-management of their superannuation, and do you see many of them coming to you to on-ramp and I guess off-ramp as well? Maybe not right now, but maybe in the future.
Yeah, absolutely. SMSFs, we have multiple clients that have sometimes individual accounts, companies, SMSFs, sometimes one or all three. A lot of people, they take it with a grain of salt because, of course, it's their retirement money they're playing with, and typically they like to stick towards, higher market cap, lower risk assets. Thinking like top 3 or anything in the top 10. But the idea is that yes, we do support a lot of SMSFs, and but we also treat that with a very fine comb.
I have a question.
That's perfect.
Yes. What their fee is, or what their fee structure is?
Question from the crowd. What your fee structure is at UpTrade?
Yeah, sure. So it's an all-inclusive, I guess, a flat fee, and typically it's 5%. But it's obviously at a 30% discount for everyone that's watching today. So it's down to 3.5%, and that's all inclusive. No charging of foreign exchange fees, gas fees, custody. Some of the brokerages might charge, 1%, 2% on custody. So flat 3.5% per transaction, per buy, sell, or swap. So most tangible example, 100 grand is 3.5 grand. And there's nothing else to worry about.
And a follow-up question, as part of that on-ramping experience, if that was taken on chain, that investor was to take custody of it, is there costs on top of that brokerage fee to then take custody of that? So a withdrawal fee for all intents and purposes, or is that all baked into the brokerage fee?
Yeah, so withdrawals are not charged. It's for every buy, sell, or swap. So if somebody wants to just on-ramp a large amount of Bitcoin instantly within the next sort of half an hour or within a day or etc., we can then send that out to them at no additional cost to any address that they prefer. It just has to be associated with the right entity that they're hoping for that to be, whether it's their individual name or personal company or SMSF.
Yeah, that's perfect. I think part of the beauty of over the counter desks like UpTrade is that you do get that execution. You don't have to worry about, I mean, I personally don't trade with size, but if there is anyone out there with size, it is good. You don't have as big of an opportunity cost or a cost from slippage. So even though, yeah, the price is the price, but you're also having someone who is a professional sourcing that liquidity for you. If it is a comparatively, like I know a lot of people will look at that percentage base and think, well, it's a little bit different to maybe what you would get if you were sort of a self-service customer on a digital currency exchange. But if you do have multiple sources of liquidity that you can tap into, sometimes that does mean a better execution for your on-ramping or even off-ramping.
Absolutely. Yeah, it's a good point. Yes, some companies, they charge through the spread, or the slippage, and we make sure we get the best pricing. And we just sort of are more transparent about the pricing in the way that it's charged. Yeah.
So my question is more, the banks are stopping us from, transacting, 10K or 50K. I wish I had that problem that I wanted to cash out 100K and go into my bank account immediately. But my question is if I were to use UpTrade, for example, do you guys essentially, because there's no stopping of you sending me 100K in fiat. It's that if it comes from a crypto exchange into my, I can't cash out $100,000 from the crypto exchange into my bank account. So would that be a benefit of using a service like UpTrade, that if I wanted to cash out and I wanted to have 100K in my bank account, does that?
No, just send it to me, Danny.
No, but do you know what I mean? Like
Yeah.
is that a service that you guys can provide? Like if I wanted to have that money and I didn't have to do it in 3 increments of, $20,000 each.
Yeah, absolutely. So it's same day. Usually if it's in Australia, most of our clients are in the US, about 80%, but if it's in Australia, it's usually same day settlement. So it gets sent out immediately. And usually we've done thousands of transactions and there's been no issue.
Does that mean that you guys essentially wait for the crypto to clear and then you guys provide us the funds immediately?
So we would need to receive the crypto and liquidate the holdings into whatever currency you wished to receive. And then once it's liquidated, we can then send that to you, any account that you sort of want to.
Just on that point, there is some, issues with buying crypto with the banks, like the previous question alluded to. If someone had, like, let's say $200,000 worth in a bank and they wanted to get crypto, like, how would they, like, what's the time frame and what sort of, spread would there be on the price? Because that's like a serious thing, like, that I know some people need to do.
Time frame, the KYC process, if it's an individual account, could take 20 minutes. Funds, if it's pay ID through banking, can take, depending on the bank, but usually within the same day if it's in Australia. And to clear a 300K purchase, we just go out and source the best liquidity. So either our traders go out and find the best pricing across each of the exchanges, and as a brokerage, we're not biased, so we just go where the money is. And so that way we ensure the lowest amount of slippage, and it's all sort of built in and baked into 3.5%.
George, one last one. It's Matt here, other Matt, host Matt. One of our online participants, Karen, hello Karen, says, how do you prioritize clients when there's a large number of requests for buy or sell during extreme dips or sell opportunities? Is it by size of trade that they get prioritized?
So we each have a bit of a cap in the number of clients that we service, but during high volumes, we typically have extra resources. So we got a trader in the UK, we got a couple of traders here on desk, and it's essentially it's by priority of who's first. So whoever initiated the first trade, and it's in that order.
First in, first out.
Yep.
All right, beautiful. Thanks very much for that, George. That was very, very helpful. And I think there'll be a lot of people that take some value out of that.
Thank you for your time. It's a pleasure to meet you all.
Cheers, mate. All right. Thanks for that. And thanks for having me tonight. My name's Matt. I go online by Merlo.eth. So don't hold that to me, Electra. Sorry. I'm one of the team at Taxon Chain. Most of what I do at Taxon Chain at the moment is in the space of self-managed superannuation funds, or SMSFs. Now, SMSFs, they have become increasingly popular as a way for people to gain exposure to crypto using their superannuation. A lot of people didn't actually realize they could do that until fairly recently. We have seen quite an uptick in adoption of new SMSF establishments where people have wanted to either go all in on crypto if you're a degenerate like myself, or diversify their overall SMSF or superannuation portfolio by having a small percentage invested into crypto. So, I mean, everyone here is a big fan of crypto. So it makes sense to a lot of us, but there is a lot of people that aren't sure what to do and whether they can still do it. So I guess the idea of tonight is to give you a little bit of information to sort of help you, or at least point you in the right direction as to what you need to be looking into and researching to find out whether this is an appropriate thing for you to be doing. I will disclose and disclaim up front, I'm not a financial advisor. I'm not your tax advisor yet, but I could be. If you would like to know more about SMSFs after this, feel free to reach out to the team. Also, we've got our QR code up the top right there. If anyone is interested in setting up an SMSF at that discounted price of $2,000, save $420, feel free to scan that QR code. Reach out to us and we can get the process started. You can also book a time with us online to discuss it in further detail before pulling that trigger. It is important for you to know superannuation, big thing. It's very important. It's our retirement, our nest egg. So don't feel like you have to rush into any of these things. Give it your due diligence. Don't rush into anything. Don't fall into the emotion of investing or fear of missing out. This is a great way to get control over your super, invest the way that you want to invest. It is also a good way to flexibly, I guess, plan for your tax events in the future. Also, it's quite helpful for retirement planning. As you can see up here, it makes sense to invest in super where it's financially feasible for you personally. As you can see, in superannuation, you pay a flat rate of 15%. You pay effectively 10% on assets that you hold for more than 12 months. So similar to an individual where you hold an asset for more than 12 months, you get a 50% CGT discount. With SMSFs, it's a 1/3 or 33.33% discount. So when you apply that to the 15% tax rate, you're effectively looking at 10%. A lot of people don't just do it for the tax. Some people like that idea of physically holding your own assets, your own wealth. A lot of people that may be very into holding their physical assets in gold or silver bullion, that may be a pretty natural extension by investing into crypto, where you can hold the keys and no one else can touch that, not even the government. Get your hands off it, Jim Chalmers. But yeah, and even when it comes to retirement, I'm nowhere near close to retirement yet. But hopefully one day when I do reach that retirement age, I'll be able to look at my crypto bags and see how much they've made. And I'm not going to pay a dime as long as I sell that while I'm in pension phase. Now, a lot of people, this is where we can save a lot of money for people. If you do want to plan for your retirement, especially, and you've got unrealized gains, there is value in planning your disposal so that you don't pay more tax than you absolutely have to. For those of you that don't know that reference, Joe Packer. So for anyone that is approaching or is in retirement age, anyone that is either retired and age 60 or age 65, you are able to access your super. Let's say, for example, and something that a lot of our clients are coming into us and asking about at the moment is they want to put some money into crypto. Some people, this is their last roll of the dice and they're going all in, or they're just going to live off the age pension. I don't condone that, not financial advice, et cetera, but they think, okay, well, crypto, I have high conviction in this asset class. It's a good way for me to potentially gain financial freedom in my retirement. I only have $100,000 though, or 200. I don't know if they have enough, but for anyone that is either approaching or is at retirement age, you can invest into anything, but for tonight's purposes, let's say it's Bitcoin. Anything that you accrue during that time in value, there's no CGT event or any tax that is payable until you dispose. The value proposition is to effectively time your disposal such that you enter yourself into pension phase and start drawing down a pension. When you have assets that have been put into pension phase, the profits that you then attribute or generate during that situation, they fall under that pension phase tax rate. It's, for all intents and purposes, tax exempt. So effectively 0% tax. So there are trade-offs with that. You do have to withdraw a certain amount from your super to meet those minimum pension requirements that are set out in the super laws and regulations. But big upshot, you don't have to pay tax. Good if you're making a big profit, neither here nor there if you're in a loss position. So if that is something that is worth considering for some people in the crowd or online, yeah, feel free to reach out to us. There's some retirement planning at the very least that may be worth doing, not just now, but into the future. It doesn't have to be now either.
2 quick questions. What's the pension age?
Pension age is age 60 if you're retired, or age 65.
Okay. And the second quick question, because I know that everyone's ready for another drink. At 420, are you guys partnered with Chain or connected to the Canada somehow? Like, what was the
No, we just like a
number?
good meme.
Just a good name. All right.
We
all
like
right.
names and round numbers.
I love Chain because they're Canadian based. We'll take more questions at the end. We've got one more speaker. I think if you're ready to wrap it up.
Yeah, that's pretty much me. I think a lot of what I'm here to talk about tonight is just, this is something to be aware of. It may be for you, it may not be, but we do want to make it aware to people, because it is a small cog in the potential tax planning structure or strategy that you can undertake. Even if you're a business owner, there are ways for you to save tax by making contributions into super. And even for some people that have made massive gains during the year, making contributions where it makes sense to do so into superannuation and claiming a tax deduction will help to reduce your tax. And again, just remember that you are locking that up until you reach retirement age. For some people, that's greater than 30 years, like myself. But for other people, it's not as far away, and they can afford to have that money locked up for a longer period of time. So if it means they save tax, then absolutely go for it. But yeah, I think there's a little bit of information on this slide here that I think don't necessarily have to go into too much detail on. Have a quick read of it. I will quickly pass over to our next speaker. I know we do have a couple of questions.
We've got questions, but we will also send out all of these slides, and then you can also have a chat with Taxon Chain afterwards. But I am conscious of time and that we have one more speaker from SwiftX.
Well, what I might do is, if you do have some burning tax questions, there's 3 of us here tonight. There's Oliver, there's Raph, and myself. More than happy to answer whatever questions you may have. I think Danny will probably kick us out at about 9:30, maybe midnight, if people have a lot of tax questions.
I'll be in bed by 9:30, but no, we'll keep it going.
But sleep by then, I think.
But let's welcome Pav from SwiftX.
Pav is one of the is the lead market analyst at SwiftX. He also co-hosts a podcast called Tapping into Crypto. I'm going to pass over to him now. Welcome, Pav.
Thanks, Matt. Thanks, gang. All right. I'm also very thirsty, so I'll try and keep this brief. But I wanted today just to talk a little bit about SwiftX and I guess how we more so directly sort of meld into the whole self-managed super fund theme of things. Obviously, we support a range of customers, but a little bit about us. We've been around since 2017, established over 700,000 users. I've been lucky enough to be there for the last 4 years, see it unfold and grow. The two founders are still very much inactive in the day-to-day musings of the business. But we're located in Milton, overlooking the lovely Brisbane River. Over 400 assets available for trading. And again, even being a self-managed super fund, you're not specifically restricted to having to choose from any particular few, but we do have options there for you. But a big cornerstone of SwiftX, and I guess what's made us, I think, be somewhat reviewed quite well in our community is we've always provided from day dot support when you need it. And that's very, very, very important, especially when you're dealing with something like self-managed super funds. You want to be able to get on the phone, speak to someone that knows what they're talking about. We have a whole team dedicated to onboarding self-managed super funds, and they keep Matt and the team very much up at night with lots of people wanting to ask lots of questions. But again, we look at the Brisbane ecosystem. We've said it already tonight. There's a lot of amazing organizations, helping people get into crypto just in Brisbane alone. And it's these sort of face-to-face interactions where we love it. We can know who we're sending people to. And then always, security is always front of mind. Ever since FTX, everyone has to, hold their hat up high with the gold standards. So, making sure we're committing to best practices there, ISO certified, all that stuff. Now, in terms of SMSFs and SwiftX, how it comes together, alternate asset exposure really is what it's all about. So unlike your traditional SMSF retail super fund providers, you don't really get that autonomy. You can't really directly get that direct asset exposure to cryptocurrencies. But again, SMSFs do provide that vehicle to get exposure. And also it can be as diversified or as volatile or as safe as you like, because you may have obviously a very balanced portfolio and you need that risk and volatility that comes from some of the altcoins in the crypto market. So, you do have that agency with an exchange like SwiftX. In terms of setting up, it's very simple. I don't know, again, the Taxon team Chain can as sort of attest to. We do have about a 1 to 2 day setup time. It's a simple form that you fill out online. You do have the ability to book in a call as well with our esteemed team. But essentially we get that account running as fast as we can, given all the paperwork's in line. Now, I'm not going to talk to all the different features that we have, but the big one for me is, again, we do stand out in class in terms of user experience to a large degree. So, the nested account is a great example. So you might have a personal account, but you can access your super fund, your company, your trust, all from a single sign-in and just simply drop down and choose what account you're wanting to manage that day and time. So big piece of the puzzle. Again, easy to access, 24/7 support. And we do very much focus on mobile first as a user experience, particularly in 2024. Our stats alone show that this pendulum swung completely to mobile. Not many people on web these days. So we do go above and beyond to try and accommodate and sort of shift the way our platform operates just with how people want it. And again, a big part of what we're also doing is global liquidity. We want to improve spreads. We have an OTC desk as well, so we can sort of service any needs on some of those more illiquid altcoins as well with our team of gentlemen on the desk there, and they're always available for a chat. And again, the also boring part is quite important, the reporting obligations for SMSF. So we have native inbuilt reporting. Again, also third-party integrations that you can hook into to generate those reports, but also manage your portfolio. So there's apps like Delta. You can integrate that along with your traditional investments and track everything for one place. That's one example. But come close to tax time, there's obviously lots of partner discounts and offers. So we've always got something happening. But that's it from me. Obviously, I'll leave the QR code up there. It takes you straight to the page if you did want to book in for a chat with one of our team representatives, have a quick Q&A with them. Always good for a chat. And there's the phone number there as well if you'd rather call directly. But I'll leave it at that. Thank you.
Thank you, Pav.
Wonderful. Thank you, Pav.
Phone overload. And we got QR code overload, as I said we would. But no, that's absolutely great. I hope you all got a chance to get the SwiftX code. There's a question. You're not allowed to ask any more questions. Is SwiftX going global, comes the question. Crypto kind of is global. Oh, it must have been a rumor. Danielle's picked up a rumor at a party somewhere, probably. Thank you so much, Danielle, for that input. Our friends at Rachel, could you just jump onto my computer and move that? See that talking thing down the bottom? You just drag that away in case that QR code doesn't work as we continue our QR code scanathon. It is that our friends at Taxon Chain have this excellent discount, and I know there's some interest in the room in these SMSF offerings. It is a very interesting investment vehicle. I know people have been using it in property in Australia for quite a long time, but it is a very interesting concept to think that you could be actually putting your crypto up there, as we've heard tonight. So I'll go back to that. I just want to highlight again our event. Don't forget, first Wednesday of the month is ATB night. Make it here, or be square if you can. We're going to be back here in 4 weeks with our friends from Kraken. And I think that's us for tonight, pretty much. We're going to have a few more nibblies and drinks. I'm going to leave that code up there for our good friends at Taxon Chain. And once more, a big round of applause for Taxon Chain who have put this on tonight. Thank you, guys. We really appreciate that. And again, hearing from SwiftX at the end there, another Brisbane-based business, very exciting. We're doing it for Queensland. We're doing it for the crypto world. All right, thank you so much. Enough out of us. Enjoy your last bits of pizza and a beer, and we'll see you in a month. Thanks, everyone. Bye-bye. Thank you online. Bye-bye.